Hello everyone, welcome to another installation in our VM F.E.T.E program series. I am your host Jovaine Brown, and today we're going to be discussing mastering your credit, expert advice on how to manage your credit and how to apply for loans with VMBS. I'd also first like to apologize for the late start. Traffic in Kingston is like really horrible right now, and so thank you for being with us guys, and hope to have an interactive session where you can learn a lot about mastering your credit and applying for loans. So I'm going to be getting right into it. We're going to be getting expert advice from Mr. Mendel Thompson right here, or local manager or business development banking manager right at VMBS right here. So we're happy to have you guys and hope you can learn today. So Mr. Thompson, I'd first like to ask you about what is credit exactly? And we're not talking about digital credit and flu credit, right? A lot of people in Jamaica don't exactly know what credit is and how it works. So could you please explain that to us?
All right, so as you rightly say, it's not phone credit we're talking about, but money credit. So credit is really funds or money that you can access. Another term for it is leverage. And you access this money that you wouldn't have saved it or accumulated it, but someone else's money or an institution's money that you can use to acquire something that you want, if it's a car, a house, if it's to help with some expenses, if you're, like your school fees or even regular expenses like buying groceries and stuff. Credit cards are used, and it's a form of credit.
Well, I heard you mention like helping school fee or all of that. So I'm a student, normally. So
Yes.
I think you guys can help me out, right?
Of course, of course.
I'm really happy to hear that. Another thing, I really hear credit score being talked about a lot, and I always see these advertisements, especially when you watch on American TV, how to check your credit score and thing. Is this something that applies in Jamaica, and how does it work? Like, how do I check my credit score?
So credit scores are very important. Now, in Jamaica, we have a few credit bureaus, and a credit bureau is an institution that collects data from different financial institutions, and not just financial institutions, but any institution that may give you service on credit, where you have a delayed payment, right? And what they do is that they collect all this data and track your behavior as it relates to repayments and servicing of those facilities. And based on your combined data, the collective data, they'll issue a score. So the higher the score that you get, the better your performance in borrowing and repaying money. So these include things like institutions like banks. You have different type of institutions like utility companies. You have like furniture companies that may do hire purchase. Any institution at all that will grant their customers any form of credit may be a part of the credit bureau. So once you're taking credit from anybody, it's important to manage it carefully or you get in trouble.
Yeah, so even you mentioned like any institution that does take credit. So for example, when you take out your car on hire purchase, when you take out something from court and you take a loan from a bank, all of these are on hire purchase, are part of the credit system, if I'm right?
Maybe, right. So it's not all companies or institutions that will report to the bureau, but right now in Jamaica, the bureaus are trying to get as many institutions as possible to report in, right, so that you can get a more wholesome view of a particular individual.
Got you. All right, so how important is it really to have a good credit score? Because I understand that a lot of people don't think that it's good to be owing to banks or be owing institutions. Here's
a powerful illustration of that, right? So you may see a young lady over there. You don't know her from Adams, right? You have $1 million and she'd like to borrow 100,000 from you. Would you lend her the money? No, you're not sure.
I don't know her now,
You're not sure, right? So what would you want to know? The first question you'd ask is, who has she borrowed from before? Did she pay them back? Did she pay them on time? Right? And that's what the credit bureau does, right? So when an institution or an entity is seeking to lend someone money, they would go to the bureau to get some information on the persons with their consent, right? To find out how it is that they have been servicing facilities that they have borrowed in the past. And the idea is that what they have done in the past is likely what they will continue to do.
I got you.
Right? So, past behavior will likely be what will continue. So they use that as an indication to say, okay, this is what may likely happen based on how the person normally operates. And then now you can make a more informed lending decision. Or you can determine the terms as to how you'd want to lend them. So for example, if the person's record may not have been so good, you might say, you know what, I'm going to need some more security, or I might need some additional collateral, or something to better secure if you're going to lend the money to the person. And on the other side, if somebody has really good credit, right, the person has been behaving very responsibly, etc., you feel more comfortable to lend them with less security or none at all. Because you say, yeah, man, if he's going to pay it back. You know, in Jamaica, a lot of people don't like to owe anybody any money. Like people like those, we love to lend money to because we know that they're going to pay it back.
All right, so I understand that's very fundamental for the credit bureau to have this information so that institutions that are lending money can have background information on that individual.
Right.
So I understand how important it is like when a person has good credit score, but on the flip side, when a person does have bad credit score, how can they go about still borrowing a loan or still getting what they need from financial institutions? Because I guess once somebody has bad credit score and they need to take or something to further their business or something, the first thought that comes into their mind, oh, I can't do it because my credit score is bad.
Yeah. And one of the most important things that institutions, especially like Victoria Mutual, will look at is why is it or what had happened to the person that had caused their credit to have been compromised in whatever way, right? Was it a legitimate reason? Because we know life happens, not true? Yeah. Sometimes we go through different seasons and different things may happen.
Yeah, because even this current COVID scenario, I guess it...
Exactly,
a lot of people.
Exactly. In the COVID scenario with the no movement days, the recent no movement days, there are many persons who were unable to work and generate an income. And in not being able to generate their regular income, and they would have not been able to maybe maintain some of their obligations. You know, they may have fallen behind on some of the payments, etc., but it may have been a temporary situation. That's one. You may have another situation where somebody may have gotten ill, or maybe have met in an accident or something, unable to work, you know, may have had some other expenses that they had to deal with, like medical expenses, and it threw them off, right? One of the important things that we institutions look at is the attitude, right? Is it that they had a situation and, you know, they're working to redeem it and they're coming back? Or is it that you took my depositors' money? Because remember, you know, banks and building societies like Victoria Mutual, we lend depositors' money or savers' money. So because I'm lending your money, I'm going to be extra careful in how I'm going to lend it.
Yes,
if I know that somebody is very, frivolous about borrowing, they'll borrow the money and say, sure, me pay them back when we're ready, or may not want to pay, I'm not going to want to lend them your money. In fact, you would come and beat me. How dare I lend them your money, you know? So we have to be responsible. We're a responsible organization, and these are the things that we look at, you know, in helping us to make the lending decision. But if you go through a situation, as all of us do at some point, and your credit is bad, is compromised, it's not the end of the world, right? Your credit can be restored. There are things that you can do to restore it, right? If you are a VM customer and you may have had some challenges, you can come in and you can speak with one of our officers in one of our branches. We can go through, assess your individual situation, and there are a number of recommendations that we can give you, and there are a couple of things that you can do, right, in order to fix it. I'm going to maybe give you one or two examples. If it is, for example, that you may have had a loan with an entity and you lost your job. That's a typical one with COVID. You have lost your job during COVID. So you're out of work, you have no income, you have gone behind on your payments, and now you're trying to catch up. You got a new job after, right? What VM did in the recent past was that we offered moratoriums. So one of the key actions, if you're in trouble, speak to your institution before, right? We'll talk to them, let them know. Boy, you know, I'm having a little challenge. Is there anything that I can do, right? These are my expectations, right? I'm sure on previous episodes, you'd have spoken about the importance of having your emergency fund. That's the first line of defense, right? Your savings will help you in terms of maintaining your expenses and your obligations. But after that, or even before you get to the stage where you run out, you speak to the institution, you let them know, you may be able to make some kind of plan. Right? If it is that you may have lost a job, gotten another job again, you have fallen behind on your payments, there are things again that the institution may be able to do in order to bring you back online. Or you may be able to refinance from that organization to a next. Or you could also make extra payments to catch up catch up with the payments that you'd have missed to bring it back in line. The bottom line is that regardless of the situation, there are things that can be done depending on the situation that can restore your credit. And once you restore your credit score, it will not be bad forever, right? It will be restored. Sometimes you may have an asset like a motor vehicle that you may have lost a job, been unable to pay. You may have to sell the motor vehicle. If you sell the vehicle, clear the loan, guess what? After a while, credit can be restored, But the key is to be consistent and be very careful in monitoring your credit, right? So if you know you have loans out there in the facility, you may have automatic payments in place. Check it, right? Just today, one of my clients called me, had gotten a late notice on a loan that she had, right? And what had happened is that even though she did the online transfer or had the automatic payment, the institution that it was coming from had an issue. The funds didn't go over, and so her loan was late, right? And she just discovered it today or yesterday, right? But fortunately, she was able to have it fixed, right? So things like that, you have to check it, because if you don't monitor it and you don't check it, then these things can happen, and you can be thinking that, hey, my credit good. And then all of a sudden, you hear that, boy, you have a low credit score because you weren't managing your thing well. And you say, but I mean, I didn't manage my thing well. I have these things in place. But sometimes systems can fail, right? So it's our responsibility, right? It's our credit, it's our reputation, it's our responsibility to ensure that we check it and ensure that everything is in place and done properly. Or else, trouble.
The bad things are only going to fall on you, because only your credit score is going to be destroyed.
Yeah, and here are some of the repercussions of a bad credit. One of them is that, one, you may not be extended further credit. If your credit is bad and you're not being responsible, an institution will choose not to lend you, and they might have a need and will not be able to obtain credit. That's one. Two, you may have unfavorable terms. What do I mean? They may charge a higher interest rate. They might give you less time to pay. They may charge you higher fees, or they may put other conditions that would be typically more onerous. Things like, they'll tell you that if you're buying like a motor vehicle, you may have to make a bigger down payment. Someone with good credit gets 100% financing for a car or even a house.
25% down payment.
But them say, no, for you, no man, you need to pay 30% because you're, or even 50, because of the behavior, right? And so you can miss out on certain deals and opportunities if you don't monitor and manage your credit properly. So that's why we're here today and talking about it, because it's important that persons know, especially young people. So before you start getting into major credit, you need to know what you're looking for and how to go about checking and the things you need to do to maintain good credit.
Well, I heard you mention a couple times that you should constantly check your credit score, but I didn't hear you mention where can a regular person check your credit score?
Good.
You said the financial institutions can check it with the credit bureau. So a regular person, what do I do?
So let me tell you. So by law in Jamaica, every citizen has the right to get a free credit report annually, right? So you would log on to the credit bureaus. Most of their websites, it's designed that you can, it's COVID time now, so you can log on to the website and apply for your free report online. You typically will need an ID, your ID, TRN, and maybe a proof of address or maybe another document to upload into the system, and they will send you the report. Typically, they'll email it to you with a password, which they'll tell you, so you can access the document. A credit report is a very private and confidential document, and they're very careful to ensure that the data would not go to, even if you gave them a wrong spelling in your email address, if somebody else gets it, they won't have your information, hence the passwords,
Yeah, so they're very careful about that.
So they're very careful and secure when they're sending you information, just as VM is, So you can check annually through the credit bureau, or if you may have a doubt, you can go into the bureau or online through their online system and pay for a credit report just to check. Right? And it's important to check because, as I said before, sometimes you think all is well and you may find out that something had gone wrong and it has impacted your score negatively. And I know if you talk about things like, which I know we're going to come to eventually, like guarantors, if you provide guarantees for somebody, how it can impact you.
All right, so for example, a student like me who's been taking student loans this year, so I guess for me it's very important that I make sure I pay back my student loans, the due date, pay the right amount so that my credit score, because I presume that a student loan is a part of your credit.
Yes, it is. Yes, it is.
Yes.
And if you're taking from the Student Loan Bureau, I know that the Student Loan Bureau does report to the Credit Bureau now. So
all those delinquent people, make sure you don't pay, please.
Yes.
Or you can't get loans anywhere else.
Yeah, you have to be careful, right? But plan in advance, check it, and if there's an issue, remember that you don't have all the answers. You're not the banker, you're not the financial specialist. You can come into VM and speak with one of our experts, and we can help to guide you through the process as to what you can do in dealing with it. Okay, I have a question there from online.
Yes, I do. All right, so a question online. How long does it take to restore your credit?
All right, so the credit improvements can begin from the moment you may have settled the facility. So let's say, for example, you had a bad debt outstanding for whatever reason, be it a credit card or maybe a motor vehicle that was repossessed or something, and you're able to liquidate that bad debt, right? Your score from that moment would typically move immediately from low score to a medium risk, because you have now cleared it. No, you don't go on to A yet, yes, because come on, you just
takes progress.
Right? So, but coming into the medium range, where you can demonstrate that, hey, I've done these actions to improve my credit, is a very good step, right? Most institutions will comfortably lend you with a mid-range credit score, right? And then now to get into the A leagues is where now after that point you begin planning and be meticulous and diligent in doing your payments on time, checking to ensure everything is fine, and over about 6 months going up, your score will improve even further.
All right, so it's very fundamental. As you said, couple pointers: keep checking your credit score. Your credit score is extremely important. Make sure that you plan ahead with how you pay your loans. Because those students who are currently taking student loans, those homeowners taking mortgages, and anybody else who's taking a loan right now, plan how you're going to make your payments. Please check and ensure that everything is going correctly. All right, so another question for you, Mr. Thompson.
Yeah.
So, in terms of, you mentioned before guarantors, in terms of how does being a guarantor affect your credit score? Because I know a lot of Jamaicans just beg a friend, say, do me guarantor for this. Ends up that they don't pay back the loan, and guess who gets a bad name?
So, I always have to talk about this story, and I've spoken about it in VM before. So I had a client, young couple, just got married, right? So they came into VM, they're doing their pre-qualification to buy their first home. They're planning now, right? So they're building their life together. And went through the process. We had them, pull their credit report as a part of the qualification process. Wife credit report, beautiful. Husband credit report, terrible, low score. But he's like, but I don't take out any loans or anything. What the little loans I have, I've been paying them on time. Why is this score bad? So then I asked, so tell me something. So fine, you say you have not taken out any facilities. Have you co-signed on anyone else's facility and guaranteed it, right? And he said, yes, I had a co-worker who went just buying a small money, like 100,000, 150,000, and co-signed on it. Well, apparently that particular co-worker took the loan and did not pay. Co-worker ran away, but he didn't know, because his other co-workers' payments would have been servicing the loan. So his credit was messed up because of that person's behavior, which he guarantored or co-signed on. So again, you see the importance of checking, right? Now the good thing about that particular client, that because we were able to check it, we're able to give him some advice as to how to go about rectifying it, which he eventually did, and they subsequently went on to purchase their first property. But the good thing about like a case like that is that they came early and checked, right? So that's why young people, men, listen to your wives. The wives say, come, we're going to check it. And in finding it out, we're able to take some actions that was able to fix it. Because if they came at the time when they found the house, they may not have been able to get the mortgage.
because his credit score is horrible. So you mentioned that you guys advised him on how to correct it, right?
Yes.
So could you give me some of those corrective measures that you would have? I'm not sure if that scenario would have been confidential, but
so
just some general examples.
So the actions that you're going to take will obviously dependent on your specific situation and what has caused it, right? So if someone, for example, lost their job, been unemployed for a period of time and has not been able to pay, as I said before, first thing you do, speak with the organization, because there are things that some organizations can do. Some organizations may say to you, okay, we may be able to grant you a moratorium, right? Where typically in a moratorium what happens is that they would add back your missed payments back to your principal and reschedule the loan and allow you to pay back after a small period of time, typically 3 months, 3 to 6 months or so, right? And in that case, your loan may not even get bad, right? It gives you a little time, right?
It gives you some time to.
In other cases, you may have to try and catch up on the payments or do a refinance. So let's say that some persons may have a credit card, and credit card interest rates are typically high from commercial banks, etc. And so they're unable to maintain the credit card anymore, and they may want to have it converted to a regular loan. The banks will afford them the opportunity. They convert it to a regular consumer loan, and they just pay a regular monthly payment to pay it off, right? In the case where you may have assets, you may be able to liquidate the asset to clear the loan, right? I mean, and there are a number of things. It all depends on the situation.
It depends on the scenario, I guess.
Which is why it's important to have a conversation. You can come in and have the conversation. In some cases, you may be able to refinance the facility, right? Because let's just say you may have a facility which is at a really high interest rate, for argument's sake. And you may be able to, say, come to VM and get a more affordable interest rate, right? You can restructure, you can maybe refinance. So it all depends on the situation and the scenario.
So we keep on re-emphasizing again and again that it's important to check your credit score. Could you please repeat on how to check your credit score? Because it seems like some people would join late.
Okay, yes. So for persons who have joined late, you can go to the website of our credit bureaus. Two of our more popular credit bureaus, sorry. Two of our more popular ones are Credit Info, and there is CRIF, NM. Well, just CRIF. It's no longer CRIF NM, but CRIF. You can log on to their website. You can Google them, log on to their website, and the website will guide you through the process, right? I know when I went on one the other day, it had a beautiful process. It said, would you like your, on the first page, would you like to check your free credit score? Follow this process, and you click and follow the process, and you can have your report that you can check and see what's happening with your credit.
All right, thank you very much. All right, but I understand that the credit score is gauged by numbers, right?
Yeah.
A lot of people don't understand these numbers. So in terms of what's score and what's considered a good credit score?
All right, so it depends on the bureau, because it's based on numbers, yes, but different companies are different scales.
I understand.
But the good thing about it is that whichever it is, the company will tell you the scale. So typically they'll tell you that the scale will range from a high of, say, 600 to a low of whatever, right? And it says anything from 500 up is okay to great. Anything below 500 may be bad in one company. In another company might be anything below 400. It all depends, right? And this is applicable if you're in Jamaica or overseas, because if you're overseas, there are also international credit bureaus. You know, you have TransUnion, Equifax, etc., that you can check your credit score on to see what is happening there. And most of them are available to check online via an app or via their website. So wherever you are, you have no excuse. You can check it.
All right, so I've kept on hearing this term being flung around, debt service, not here, but in terms of other institutions on television and on different media platforms, a debt service ratio. So I don't necessarily understand what that is and how does it work and why is it important.
All right, good. So the debt service ratio is it's a tool that financial institutions use to calculate someone's affordability, right? So the concept is actually very simple. you have an income of X, say $100,000, yeah, and on a ballpark, institutions may say that, look, no more than 45% of your total income should be used servicing debt. So they use it as a reference, right? Now, obviously, depending on your income or stuff, if you're earning like a lot of money, it may not matter much in terms of your debt service ratio, because you have cash flow or free cash that can compensate if you have a high debt service. But the smaller your income is, the bigger the impact on your debt service ratio. So what it is your monthly loan payment obligation, right, which is what you have to pay, divided by your total monthly income. So obligation or total loan payments over income equal debt service ratio. Now, if you have an existing loan and you're taking on a new loan, and let me use 100,000 example as a good one because the numbers are easy. If you have a loan of, say, 25,000 per month, you're earning $100,000, your debt service ratio would be 25,000 over the 100, which is 25%. Now, if it is that you're taking on another loan, let's say you're purchasing a car, right, and the monthly payment on that car is another 25,000, that would make your total obligation 50,000, 50 over 100, a debt service ratio of 50%. If the standard for the institution is, say, 45%, what they'll say is that, boy, it is too much, so you need to reduce it, right? And you typically reduce it. They may say to you, we'd like to encourage you to make a down payment on the car, a small down payment that would bring the obligation down and bring it within the limits of the entity.
Yeah, because if you make a down payment, you can make monthly payments, right?
Then your loan would be less, and your monthly payment would be subsequently less, and the debt service ratio can be improved, right? Other things can be done to improve it. For example, if you are doing an education loan, right, like a student loan, for example, if it's an unsecured student loan, you'll typically have 5 years to repay the loan, right? And the time factor, which is the loan term, the shorter the loan term, the higher your monthly payments, because you have less time to pay it off. But if there's a way to extend your loan term where you can have more years to pay, your monthly payment will go down. So in some places like VMBS, when we're looking to see how to structure a client's loan, we may ask them, do you have access to collateral, right? That with that collateral, we could give you a longer loan term. A longer loan term could reduce your monthly payment, bringing your debt service ratio within limits, and it's easier for you to afford the loan. So there are a number of different things that can be done. Your banker will look at, your financier will look at to see how best they can help you to structure your proposal to make it affordable for you.
Yes, because the bank institution is trying to help you at the end of the day. They don't want the reason why debt service ratio is in effect is so that you don't pay too much of your own income, right? So you can still have a standard.
Well, look, I can't speak for any other institution. I can talk about VM.
Yes.
Now, VM is definitely trying to help you,
making sure that you can still live off your paying back alone.
So, but these are the principles that that we use, and I'm sure Brian, you'd have a better understanding, and you're better able to ask questions when you come in to speak with your officer that can help you to guide you through the process.
All right. So this whole credit score system, by the checking credit scores and everything, how long has this been in effect in Jamaica? Because to be honest, I've only started hearing about it recently myself. I'm not sure if it's because
you just started borrowing recently.
Yeah,
but they've been here for a while. I think over 10 years now. Credit bureaus have been in Jamaica. So it has been a while, and of course, because it's data that is coming in and being refined, it is improving, right? Another reason, as you mentioned, that point, where it's important also to check your credit report and your credit score, is that there may be errors, like real errors.
Mix up somebody credit and
oh yes. So like your name is John Brown, John Dwight Brown, and somebody's name is John Stephen Brown, and something may have happened with the paperwork and they got mixed up.
So yeah, a lot of that happened in Jamaica.
Sometimes,
so
yeah, because remember now, the institutions that have granted the loan is feeding the data to the bureau, right? And with data, garbage in, garbage out, depending on who is supplying the data. So it's important. Sometimes, data mix-up might happen. There might be something happening there.
Simple misspelling a name or something like that.
Right, and it may not be that. There could be a situation where your facility has been paid, but for some internal processing reason it has not been credited to your loan, right? So the loan is being reflected as not being paid, but you paid your money, right? It could be an internal error that has caused it, which is an error. The good thing about the error is that they can be corrected. So when you check, if you see that there's an error, you're able to contact the institution, advise them of the error, they can correct it, you know? And so in doing that, and there are other things that can happen. Errors can happen in different ways. That can be caused by something that you have done, maybe something within the institution, whatever it is. But the key, once you check it, you can identify it if there's one, and then you can work with the institution to have it corrected. And once it's corrected, the score will be updated. As I mentioned that, if you find an error on your report, there's actually a process where you can dispute it. So through the credit bureau, you can actually formally dispute the record that they have presented to say, no, I'm disputing this is wrong. And it goes through a process with the bureau where the bureau will communicate back with the institution will do their checks. And if it is a bona fide error, the institution will correct it, and an updated report will be presented, and a letter stating that there was an error, it was corrected, and we now present what is your correct score. And the bureau would typically also update anywhere that may have pulled your credit report and got the incorrect information to say, no, this information was wrong, it was an error, please see the corrected information right now.
Right, that's really important.
Yes.
So as emphasized, please check your credit score. So those students who take in student loans, those of you taking car payments and etc., please check your credit scores. Even if you're making the payments, sometimes things may go wrong. It's not your fault, and sometimes errors can happen. So please check your credit scores. The only person that's going to be affected is you. All right, so
no, not just you.
Well,
remember, you may have guarantors too that may be impacted.
So not just you, your guarantors too.
So if, for example, especially for students, you may have a family member, your mother, a parent or an aunt or a very good friend that may have put their neck on the line to give you a guarantee in order for you to get the facility. It's really important for you to honor their stepping up for you, right, and ensuring that they don't get affected by your actions, because an error could impact them too and prevent them from being able to accessing affordable credit or credit at all. Right? So yes, everyone has a responsibility. If you have served as a guarantor for someone, you have a responsibility to check to ensure that everything is fine. But if you have received, if someone has stepped up for you and been a guarantor for you, it's important for you to be responsible and honor that by ensuring that you fulfill your obligations. It's really not good, which we see a lot of times, and with student loans, as I mentioned, persons are afraid to be a guarantor because some students will take the guarantor, pay, get the thing done, and then they run away.
Yeah, there's a lot of students and a lot of
and the guarantor is the one left holding the bag, who has to now come and make the payments on the student's behalf. Yeah, so it's not fair. Don't do it, please.
All right,
let's be responsible.
We've covered a lot of information about credit and etc. But I also wanted to go into loans, a bit about loans. So I know a lot of people that they're worried about when they're taking loans. Oh, I'm going to get myself into owing people and stuff. A lot of people are against the idea. As you said before, Jamaicans don't like old people, right?
Some Jamaicans.
Some Jamaicans.
Some would gladly say, borrow.
Take
everything.
Yeah, some Jamaicans don't like the idea of owing people, and they always think of a loan as a negative thing. But I understand that a loan can assist you in business and etc. So what are the benefits of taking a loan to actually further yourself? Could you please?
All right. So let's talk about that a little bit. So what's important is why you're taking the loan in the first place, right? So if it is that you're taking out a loan to go to a party, right, to get your outfit, get the hair done, some of the ladies, to go to a party, it's not a responsible, in my opinion, that's not a responsible purpose for a loan. Because you're taking on money, taking on debt and costing the money, is it improving you? So the question you're asking is, when I take this loan, is what I'm getting for this loan putting me personally in a better position? If the answer is no, it would be better to not take a loan for that, right? Now, if you're taking a loan which the benefit of it is going to put you in a better position, then of course you should consider it, and once you can afford it, take it. Let's use education as you talk, right? So you may have completed CXCs, you have a couple subjects, you want to get a job, but guess what? Many jobs that pay more money require a degree. So if I invest by taking a loan and investing in my education to earn my degree, I can now get employment that can pay me way more. If you're doing an advanced degree, like you're doing your master's or your law degree or something, some skill that is needed, it's even more money at the end, right?
It costs a lot
so
more.
it's an investment. So it's an investment in your future. Same thing as it relates to assets, right? You're buying a property, right? It's a location, but you get a good property. It's appreciating over time. It's putting you in a better position, because if you were to buy a property for, say, $10 million, in a few years it appreciates to $20 million. That equity that you have, if you sell the property, you're getting the additional money, or you can use the equity to help you to finance something else and put yourself in a better position even further. Yeah?
I got you.
I remember I had a conversation once with someone, because we're having the whole thing about a motor vehicle. Is a motor vehicle an asset or a liability, right? And I say it depends, right? Because you have people, you read the Rich Dad, the Poor Dad, and there are different ideas about assets and liabilities. So I had a personal experience where I lived at the time, right? I had a motor vehicle. The vehicle was stolen, right? So in commuting to work and back, bus didn't run there. So I had to take a taxi, and it was running me about 12 to 14 or 1,500 per day in taxi fare, right? If you do the maths, you multiply that by a month, you have over $40,000 in just taxi fare alone for the month. But then I look at the option. If I were to take a loan and buy a car, the repayment on the car was like, at the time, 25 grand. So would you consider the car an asset or a liability in that situation?
It's an asset.
It's definitely an asset.
And when you're taking a tax, sometimes you reach to work late, it may affect your earnings.
Or you may not even get one, you may not even get to office. It's not like now when you're working from home, but for many people. But that's what I'm saying. So each situation is unique, you have to assess it. The principle, though, is that if taking the loan and getting whatever asset or whatever you're getting is putting you in a better position overall, then it would be a good thing. If it's not improving your life in any way at all, then it may not be the best decision to take a loan for that purpose.
All right, and well, one last question, because I understand we're running out of time. What's the average loan process with Victoria Mutual? How do people generally apply for loans here?
All right, so the process in terms of time will vary based on the type of loan, but in terms of what is required is very similar. VMBS will require proof of income, proof of your identity, right, and your credit report, and an application form that you will fill out, right, where you let us know, your situation. It will tell us your obligations, etc. And depending on the loan type, we may need a proof of purpose, right? So if it's to buy real estate, or if you're buying a car, whatever it is, we need a proof of purpose. So that application part is the same. Once you come in, you have completed the application, and of course when you come in, you'll get the list of what your requirements are, and you provide it. We'll go through the process of making an assessment. If clarity is needed, your loan officer will contact you to get the clarity, and it goes through an underwriting and adjudication process where a lending decision will be made. And once we have decided, yes, your loan is approved, the next part of the process would be to complete the documentation for the loan. You'd have accepted the loan, signed the promissory notes, etc., and we would disburse the loan to you.
All right. Thank you very much, Mr. Thompson. So I understand that we are at the end of our session today. I'd like to thank everybody who took their time to tune in. I really hope that you learned something about your credit, how to apply for loans, and best decisions that you can make for your financial future, and best how to plan effectively to manage your credit and your debt. So I am Jovaine Brown, and thank Mr. Thompson here for joining us today. Another session on our VM F.E.T.E program. Thank you guys, and hope you guys have a great day. So any further questions, please check in with your financial institution on how to apply for loans.
VMBS?
VMBS, the best financial institution in Jamaica.
Yeah, your financial institution is VMBS. So call us. Right, and of course the number is 754 VMBS, right, or 754-8627, or you can email us at manager@myvmgroup.com, and we will communicate with you and we can get the process started for you.
And you can also link any of us VM F.E.T.E ambassadors that you do know. So shoot us an IG DM. We do have our numbers on WhatsApp. My name is Jovaine Brown, JA on Instagram. You know, shoot me a DM. I can get you connected to banker and get you all the information you do need to know to get your loans and everything processed. So thank you guys again. Thanks for making the VMBS, and hope you guys have a great day.